Hi, this is Greg. Welcome to the channel. On this channel, we talk about markets and investment with the sole purpose of making you a better investor and a richer investor. So once again, inflation comes on the radar screen. Paul Tudor Jones had another interview with CNBC, which I found fascinating. Paul Tudor Jones, of course, is the legendary hedge fund billionaire, master of the universe, and he's one of the people that I follow very closely, and I think it's important for you as a subscriber or a viewer to also follow him because he's got his fingers on the pulse and he's a very brilliant guy. In this interview, he reiterates what he said several months ago in that inflation is not transitory, and he talks about all the reasons, both structural and cyclical, as to why inflation is not transitory and how the Fed is basically incompetent, and also talks a little bit about how you can protect yourself. I thought it was particularly interesting the way he talks about the dramatic and completely insane growth in M2, which is a measure of the money supply since COVID. And he also talks about a number of other factors that lead to inflation not being transitory. So take a look at the interview. I have it here in its entirety. It's only about 3 minutes. Take a look at it, and then I'm going to come back after the interview with a few more comments.
I think the thing that to me is the number one issue facing the Main Street investors is inflation. And it's pretty clear to me that inflation is not transitory. It's here to stay. And it's probably the single biggest threat to certainly financial markets. And again, probably, I think, to society just in general. So this 5.4% CPI is a real eye-opener. It's the highest CPI we've had in 30 years, and of course, it's going to go higher here in the next few months as energy feeds through it. So for an investor in particular, most of this audience, it's absolute death for a 60-40 portfolio, for a long stock, long bond portfolio. So the real question is, how do you defend yourself against it? How persistent will this be? And what does the outlook hold? And there's a combination of structural and cyclical forces that right now are all rolling in the same direction to say that inflation can be much worse than what we fear. So let's just start with the cyclical forces first. We have the demand side of the equation, and that would be M2. M2's grown 5.4 trillion since the pandemic began. That's $3.5 trillion greater than what it normally would have. That $3.5 trillion, 16% of GDP, just sitting in liquid deposits that could go into stocks or crypto or real estate or be consumed. So that's a huge amount of dry powder that's just sitting there waiting to be utilized at some point, which is why inflation's not going to be transitory. So that's the first big, I think, cyclical issue. Also, don't forget, we just raised another demand factor would be we just raised benefits for Social Security retirees as well as military, about 75 million by 5.9%. That's just more fuel to the inflationary fire. The second big component would be the wage pressure that we've got. And the easiest way to see that is obviously job offers relative to unemployed. We're 10.4 million job offers, 7.7 million unemployed. It's clear that we have a structural issue in our labor force that's not going to be solved by 0% interest rates and quantitative easing. So if you take those two factors and then overlay the structural issues, and there are four big ones, the structural issues, you really paint a very bleak picture on inflation. The structural issues are, first and foremost, we have a Federal Reserve Board that are inflation creators, not inflation fighters. And that is a huge, huge deal.
Okay, that was very interesting. There are many takeaways from this, but the four major takeaways that I got from it was that this 5.4% CPI print that we recently saw is further evidence that inflation has taken hold of the economy. Just look around at the grocery store, look around, try to buy a car, try to do anything, and it's very easy to see how inflation is taking hold. And he makes the point that not only is it taking hold with this 5.4% print, but it's most assuredly going higher. The next issue is the increase in M2 is absolutely unprecedented. Okay? The M2 has basically gone up $5.4 trillion since COVID kicked in. And that's a net increase, net of what would have happened anyway, of $3.5 trillion of excess money. Now, this excess money has found its way into people's bank accounts, and it's sitting there as so-called, dry powder, so to speak. And it gives consumers dry powder to spend more on goods and services, therefore exacerbating even further the supply constraints that we are currently seeing on virtually everything in the economy. Next, he points to the labor imbalance. There are something like 10 million job offerings out there that still need to be fulfilled out there. Nobody is coming in to fill those positions. There is enormous pressure developing on labor costs, and anyone who's studied economics knows that the labor input is a major input to inflationary growth. And the last, and probably one that I have been preaching on this channel for about a year, is that the Fed is not an inflation-fighting Fed. The Fed is an inflation-creating Fed, and that's all they know how to do with their excessive money printing and their bond buying, keeping interest rates artificially low. There is nothing that they can do in their toolbox aside from dramatically raise interest rates to quell this dramatic rise in inflation. And of course, if they do anything like that, you're going to completely crush the economy. So I think the Fed has backed themselves into a corner here where they have hardly anything they can do except taper, allow rates to go up, taper the QE, and at some point more dramatically and more aggressively raise interest rates, which is going to crush the economy. Not a pretty picture. He also expresses that he thinks that crypto is a good inflation hedge. It probably beats out gold at this point. That's beyond the scope of this video. But I think all of these things reiterate what we've been saying on this channel for about a year. And I think that the country has worked itself into a corner with inflation. Inflation is going to do nothing but go higher. And these imbeciles in Washington are still discussing a $3.5 trillion tax and spend bill and a $1.2 trillion infrastructure bill. That's more like a $5 to $8 trillion of additional spending that will go into the economy. And thank God we can keep praying that either both bills get shot down, or at least the tax and spend extravaganza gets shot down. It's yet to see if that happens or not. But keep your eye peeled to this channel for further updates as things progress. And please subscribe and like this video and hit the bell so you can be on board for future videos that'll be coming your way very soon.